All right, so we'll talk about the other block in further detail today. All right, so last night I gave you guys some rules for other blocks. I gave you guys some rules for other blocks, and I got quite some good responses from you guys. Some of you understood it well. Some of you are still making a few mistakes with it. All right, so we'll go back to what we said yesterday, just as a summary. Right, so another block is an area in price where there was a lot of buying or selling. Okay, let me skip this. Another block is either bullish or bearish, so it either causes an upward or downward movement in price. Bullish order blocks are the last down candle, red candle, before an upward impulse move happens. So I mean, some of you did not mark the entire candle, so I said it is the last down candle. All right, so when you're marking your order block, you should put it in mind that it is the last down candle before the impulse move happens. All right. So if it's a down candle, it is the last up candle before the down candle happens. So some people just marked wicks. Yes, you can mark the wick as the other block, but that's in certain cases. That's if you look on the lower time frame. You understand? I will send you guys a video on blending candlesticks. All right. So if you see, let me try and give an example. If you see, let's say you have a candlestick like this. Let's have a candlestick like this. Let me say it is a there is no red here. I'll find red. Let me just improvise with this. So let's say this is a red candle here, and then it has a wick. The wick is the small lines you usually see beside the candle. All right. So let me say it has a wick here, like this. It has a wick. All right. So basically, what happened here is that price pushed down. All right. Price pushed down. So what happened here is that, remember when I from the free resources class, we said this is for a down candle now. This is the opening price. Then it moves down as low as this place. Then it closed here. All right. So um, this is the opening price, the top here. All right. If it has another week on top, let me say it has another week on top now. So we are assuming that there's another week on top of it. Let me assume that for now. All right. So assuming that there is another week on top, this will be the the highest price. Okay, so that will be the highest price, and this will be the closing price, and this will be the lowest price in that time period. All right, so we have the the opening price. It goes as low as this, also went as high as this, and then closed here. But then that's not the point of what I'm trying to say. So this candlestick, for example, right? This candlestick, for example, so let me assume that this is our bullish order block. Okay, I'm assuming that this is our bullish order block. This is the last down candle, and after this candle happened, there was a price movement to the upside. A price movement to the upside. So anytime we come down here, we want to buy. Okay, but where we actually choose as our main order block since we have the wicks. All right. So most times we just usually choose the body of the order block. Just usually choose the body. All right. Most times we use the body, except if the wick is very small. So most times we use the body like this. Let me change that back to default. So most times we just use the entire body minus the top wick for a bullish order block. But sometimes we will add the wick if the wick is very, very tiny. All right. So if the wick is very small, we'll add the wick. But going back, let me stop beating around the bush. Going back to what I was saying. If we have a candlestick like this, all right, what essentially happened, let me say this candlestick is on the 1 hour time frame. This is a 1 hour candlestick. What happened there is that it opened at this price, then went down to this price, and then went up to this price, then closed. So if you express this thing as two candlesticks, if you express it as two candlesticks, this is what it will look like. First of all, it went down, all right? First of all, went down to here, okay? And then later on, we now went up. So from down there, we went up to here, right? So that will be a green candle, right? So basically, this is what happened in this case, all right? This is what happened here in this candle. This is what happened if you go down to a lower time frame. So which will now be the other block area? The other block will be the last down candle. That means that this entire area is the other block, all right? That entire area is the other block, all right? So if we have another example, or should I keep giving? Let me just give one more example. If we have another example that is like this, let me say we have a candlestick that is like this, all right? So this is the down candle. It happens to be like this, and it has a wick on top. It has a wick on top. So this will now bring you guys to why we ignore the wick. So it has a wick on top. Okay, has a wick on top. So what happened here is that first of all, price opened at this price. Okay, it opened, this is the opening price. Opened at that price, then went down. All right, then it's now from that lowest price, it went up to there, and then it finally came down again and closed at that price here. It closed at this price over here. So in this case now, in this case, if you bring them together, the last down candle is this guy. So this is our other block area. So that's why we will ignore the wick. All right. So basically, I don't want you guys to get too confused. All right. There's a deeper understanding of how candlesticks actually work. You understand? So as the candlestick is moving, what you see on one time frame, you can easily think about it and know what will be on the lower time frame. After some time as a trader, you can easily just look at the candlestick and know that okay, this is what's formed on the lower time frame. But what I would do is that I would look for a good YouTube video on this topic that will explain it better for you guys. But what I want you guys to note is that most times we use the body of the candlestick. All right. If the candlestick is big now, for example, let me try and find a good candlestick, a good order block that I can use. All right. Let me try and find one. Right. So now let's assume that I'm making an assumption now. All right. Let's assume that this is the other block, this candlestick. What we'll do is that we'll ignore the wick. Most times we'll just ignore the wick and choose the body. Why are we ignoring the wick and choosing the body? Because on different brokers will have different wicks. All right. The length of this wick on another broker will be different. It might be longer or shorter. You understand? So we choose only the body because the body is the bulk of the volume. And once the hour or the time period is closing, most brokers would use eventually the same price as other brokers once that time period is coming to an end. But during that time period, they can easily hunt people, stop hunt their customers or things like that. But the bulk of the volume is within the body. So most times we just select the body of the candle and ignore the wick. All right. So if you guys watch, so it's not be every time that you ignore the wick, all right. But if you guys watch and understand how candlesticks form on a lower time frame, you will know whether to use the wick or whether to use the body and the wick together. All right. So I will send you guys a video after this class, but for simplicity's sake, let's just say we ignore the wick most times. All right. So let me try and move on to today's topic. This is just um small commentary because when I checked through your assignment, some of you guys just used, I don't know where you guys discovered that thing from. Maybe it's from my assignment. My assignment, I was trying to do some advanced things. So what I can see on the chart, you may not be able to see it. So I was seeing how the thing will form on a lower time frame. That's why I use week in some instances. So some of you, I didn't teach you week and you use the week like this, and I don't know why. All right. Some of you did not even use anything. I saw one guy that just did like this, point this line to a random place and say that's the other block, and I'm like, your line is not touching anything significant. I can't really see how that's the other block. All right. So you guys should try and pay attention to the classes and the lessons I'm giving you. Don't just do things because that's what you feel like it or because you feel like submitting the assignments. The assignment is not for submission. The assignment is for learning. Okay. The assignment is for learning. If you can demonstrate that you understand what I asked you to do, all right. So even if I ask you to do 10 and you do 5 and you did very, very well, and I say, this guy really understands this thing, but he do not have much time to do all the 10 homework, all right? But he has a deep understanding of it. He spent time on the lecture. He understood this thing very well. Then I will not even think about how incomplete your assignment is. I would be happy that you understood what I was trying to say. So I've said this thing before and I'm saying it again. The purpose of the assignment is for you to practice and learn and be better at this thing. It's not for you to submit to me. I have no joy in marking the assignment. I have no joy in checking it. In fact, it wastes my time. It wastes the time I don't have like that. It wastes my time. All right. So the assignment is not for you to submit. I'm going through the stress of giving you assignment and marking the assignment so that you can learn and be better, so that I can be sure that you understood what I taught. So don't be scared or too nervous to submit your assignment. All right. What you should be nervous about is to understand what I teach you. Okay. So that's what I want you to be nervous about. Even if you don't submit your assignment and you're asking me questions every time, I'll say, this is still an active student. He's just not doing his assignment because he doesn't understand it. You get? So I'll say it again. The assignment is not for you to submit. The assignment is for you to get better at this thing and for me to know where you are having issues. All right. Anyway, time is fast spent. We're already almost 20 minutes in. I've made some notes here before the class started. Some rules for other blocks. All right. I didn't want to, um, okay, how would I put it? Some rules for other blocks. There are other rules, but I can't really remember everything. As I remember them, I'll add to this list. Okay. So now, price doesn't go to or far beyond the main threshold. So what do we mean by the mean threshold? The mean threshold is simply halfway. Okay, let me add one more rule. Let me add one more. Um, um, two, two or more consecutive candles can be blended into one other block. Other block, because they might, because they, okay, let me not say might, they represent just one candle on a higher time frame. Okay. I'll try and rush through this. I wanted us to do imbalances today as well, but the way it is, we may not be able to go through everything. But let me go as fast as possible. So price doesn't go far beyond the main threshold. So now, if you are, let me try and find another block first. Yes. So let me assume this one, right? So we're looking at um, this last candle here. We are looking at it as our order block. All right. We're looking at it as our order block. Look at that as our order block, right? Or instead, that person. So we're looking at that as our order block. I can make it a little bit smaller, like this. Okay, that didn't work. Let me just leave it like that. But let me find something that suits what I'm looking for. Yes, I found something better. Okay, so now look at this last down candle. All right, look at that last down candle. So when price went above it, it came down and used it as the order block. All right, so let me just use that initial place. All right, so use it as the order block. All right, so we're ignoring the wick that is on top, the shadow on top, and we're using the body of it. We're using the body of it, right? So now, what is the mean threshold? The mean threshold is the middle of the body. Okay, so if you look in and try and zoom in into the body, okay, so this is the entire, this candle here, that's our order block. So if we use, we can either use um a Fibonacci tool, all right? You can either use a Fibonacci tool, Fibonacci here, measure the range of the body. So from the top to the bottom of the body. At the middle part, we'll call it the mean threshold. All right. So that's like the equilibrium of that candle. Equilibrium of that candle. That is what we call the mean threshold. So if the order block is valid, we don't expect price to get to this mean threshold, or even if it gets there, we don't expect it to stay long under there. Once it has gotten to the mean threshold and is spending too much time there, it may mean that that other block will not work out. Right? So for most other blocks that are very, very strong, once price reaches near the mean threshold, it usually flies away and runs away. Okay. So it doesn't spend much time there. So some traders actually, instead of using the whole other block, they may just use only the mean threshold. Some traders do that, but I think that that's a little bit overkill. You're going to miss a lot of trades if you do this. All right. Some traders just used to use only this place, and if it goes down here, that's when they are going to enter the trade. But I think that that's a little bit excessive. All right. So I'll just leave it as the body most times, except if the candlestick is very, very long and very, very big. I may use the middle threshold as my entry, or I go on a lower time frame and find an imbalance, even though I've not gotten there. Let me not stress you guys yet. All right, so the mean threshold is the middle part of the body of the candle. So a valid order block, the price doesn't go to the mean threshold, or even if it gets to the mean threshold, it doesn't go far beyond the mean threshold before reversing. All right, so if the price comes down into the candlestick, the order block, we don't expect it to reach the mean threshold. But even if it reach the mean threshold, that will be like the stretching point for that move downward. Okay, we expect it that when it hits the mean threshold, it should not waste time before going back up, before flying to the upside. All right, so that is what the mean threshold is. Instead of using the Fibonacci tool, okay, we can also just draw this rectangle. You can see our rectangle here. Okay, there is this dot in the middle part, these nodes. You can also use that thing as your main threshold. That's the middle of the rectangle, which means that is also the middle of the body of the candle, and that is our main threshold. So either use the Fibonacci tool to find it, or you use the um, rectangle middle dots to find your main threshold. So basically, that is it for the first major rule of an order block. It doesn't go far beyond the main threshold. All right. So rule number two: the order block is the candle with the biggest range in a consolidation. The order block is the candle with the biggest range in a consolidation. So what do I mean by that? What I mean is that sometimes you may have um, you may have the fact that there are many candles. Okay, there are many candles at the beginning of the move. Let me see. Um, let me see. Let me see. Let me see. Let me see. Um, Let me just use this part as an example instead of wasting much time. So look at this upward move from here. Look at this upward move from here. All right. So down here we have a series. We have like one, two, three, four down candles. All right. So if we have these two candles sitting side by side, okay, and both of them happen before the upward move. All right. So if one candle is smaller than the other candle, okay, so if one candle is smaller than the other candle, so it has less range. All right, so we have one candle is this big, and beside it, okay, we have another candle that is smaller. We are going to choose the
CJ, sorry, I don't know if it's me, but you were breaking up
okay, where did I break?
when you were trying to explain from among those candles.
Okay, let me go back. I said if we are in a consolidation, sometimes you may have that um we will experience something like this. You might experience a consolidation, okay, a consolidation before the price now flies, right? So if the price should come down to this area and you have several down candles there before the consolidation went higher, all right, before the expansion or before the impulsive move. If you have several candles, several down candles in this area, you are going to choose the one with the biggest range. So the candle with the biggest body is what we're going to choose as our order block. We're going to ignore the smaller ones. All right. So that means I was now showing you guys this example that, for example, now we find two candles like this. All right. We have two candles like this, and then after them, the price flies out. So if the price should later come down, the person we are going to choose as our order block will be this guy that is taller, this guy that is bigger, this guy that has a bigger range. So that means, even though this case is not exactly what I'm looking for, but let me say this case, for example, this candlestick beside this red candle here is a little bit bigger than this one. It's a little bit bigger than this one. Okay, so we are going to choose the bigger candlestick as the order block in this case. All right, we are going to choose the bigger candlestick as the order block in this case. All right, so we choose the candlestick that has the bigger range to be our order block. We choose the candlestick with the bigger range to be our order block and ignore the ones that are smaller than it. So the candle with the biggest range in a consolidation is the other block. So that's the second rule. Okay. So rule number three is that we usually use the body of the other block except if the wick is a little big. Okay, this is what I explained first. This is what I explained first. I will still send you guys a video on how to blend candlesticks from one time frame to the other. Or if you still don't understand the video after I send it, what you can be doing is that you can go down to a lower time frame to check your other block and make sure that you select the one that has the biggest body. What do I mean? If you have a candlestick that looks like, let me assume that this is an order block now. Let me assume that this is a bullish order block. It looks like this. On a lower time frame, it will consist of it opens, okay. It will consist of a down candle, then it will consist of an up candle, okay, then another down candle. All right. So you would go down to a lower time frame, and on your lower time frame, you can determine that this is now your order block. All right. So you can go down to a lower time frame to refine it, or you can just try to improve your understanding of blending other blocks. I say other blocks, blending candlesticks. But I will still send you guys the video later on. But I said for simplicity, we only use the body of the other block and ignore the wick that is on top of it. So that means that if it is a bullish order block, we ignore the wick that is on top. If it's a bearish order block, we usually ignore the wick that is um under it. All right, we ignore the wick that's under it. So let me try and look for an example just to make it go home. So let's assume that this candlestick is our bearish order block. For simplicity, we will ignore this downward wick and only select the body of the bearish order block. But if it's a bullish order block, we'll ignore the wick on top of it and use only the body. So I'm looking for a candlestick that has a bigger body. So let's say this one now, we'll ignore this wick on top and only use the body for the sake of simplicity. All right. So that's what I mean by this point. All right. That's what I mean here. Okay. So now the last point about order blocks. Two or more consecutive candles can be blended into one order block because they represent just one candle on a higher time frame. So now, what do we mean by that? Remove 11 drawings. So right now, I am on the 1 minute chart. I'm on the 1 minute chart. So if you find a place where you have um, three candles or two or more candles following each other, all right, two or more candles following each other, you may discover on a higher time frame that they are just one candlestick. So, for example, if I mark out these three candles here, they might sometimes they might just be one candle on a higher time frame. Okay, so if I go up to a 3 minutes time frame, you can see that it is just one candle. You can see that it is just one candle. You can see that it's just one candle. So this kind of prediction comes with experience, but what we can easily say is that if they are following each other consecutively like this, you can mark all of them as one order block. All right, because if you go up to a higher time frame, it will just be one complete candle there. To just be one sure order block on that time frame, so that you will not go and be on this 1 minute chart and you will now mark this one as your order block and price will never get there. Sometimes it happens that you may go and mark this one as your order block and you'll be expecting price to come in here before selling. Okay, meanwhile, the whole thing is the order block on the 3 minutes time frame. So it may come into the big candle here and sell off from there. All right, can sell off from there. And if you had done this, combine all of them together like this, okay, you would have gotten one candle on the 3 minutes time frame, and that would have been a good order block for you to sell from. All right, so if you have one or two or more candles, two or more consecutive candles, they can be blended into one order block because they represent just one candle on a higher time frame. So let's try and look for another example of this phenomenon, or how would I put it? Let's try and find another example of this thing happening. Okay, so we have this area here: one, two, three, four, five candles, five upward candles going together, right? So you might discover that on the 15 minutes time frame, all this is just one candle. Okay, it might be that on the 15 minutes time frame, all this is just one candle. Okay, so let me check if that's the case. Let me check if that's the case. You can see it. You can see that on the 15-minute time frame, all of those candles are just one order block, just one candlestick on the 15 minutes time frame. So that's why we say that sometimes, okay, two or more consecutive candlesticks can be blended into one order block because they represent just one candlestick on a high time frame. So to avoid big order blocks like this, I like to choose other blocks that don't follow each other. Okay, because if they follow each other like that, that will mean that my stop loss will be bigger than it's supposed to be. Okay, so most times I can just select an order block that has a bullish candle by its side, like this one now. I may choose that one, right? I may choose that one, right? And if I find a case where the other blocks are many candles following each other, I will just choose to not trade that particular setup, even if it's juicy. I may not trade it. Okay, it's not every time that you trade. If the thing doesn't meet what you like, if you like a smaller stop loss, you can just choose to ignore this kind of setup and choose something like this more often. All right, but some of you may like this. You may still be able to refine it on a lower time frame and make it a little bit smaller. But if you're not that good, you can just stick to something like this. All right, so that is another order block rule. So there are other rules I can bring to you, but I'll bring you the remaining rules when we get to sponsored candle. All right, sponsored candles are the type of order blocks that you want to be trading from. The sponsored candle. All right, so these are the best candles. These are the best order blocks to trade from, and we'll talk about them later. But until then, I think I would end with these four rules of order blocks. Okay, so the next thing we're going to treat is imbalance. Imbalance. Abi? Imbalances, yes, imbalances. But before we treat imbalances, does anybody have a question with order block so far? Any questions about order block?
CJ,
Yeah,
if, for example, we've done all that analysis and we've determined where the that midpoint is back,
yeah.
then the price now goes, it doesn't get there, and then it starts moving back, and then we enter the trade, for example.
Come
Is there
again.
any type of, sorry, is there any particular calculation that we can do to determine how far the um, the price action or the liquidity or what the impulse movement will go? Do you understand?
Okay, so if we have the order block, for example, and we
Yes.
enter the other block and we buy it, Abi,
Yeah. Yeah.
can we calculate how far the impulse move will go?
Yes. Yes.
Okay, okay, okay. Well, the truth is that nothing is sure in the market. Nothing is sure in the market. But there are certain things that we know in the market that will tell us that this is how far it will go at the very least, except if something tremendous happens, because anything can happen in the market. But for most times, you can easily say that. Let me give an example now. I can easily say that if I have a range now and the trend should continue, the minimum place that the trend is going to reach is the top of the range, right? So let me say I have a bullish trend. Okay, so if I'm buying here, let me say this place is an order block. If I'm buying here, should the trend continue, the minimum place that the impulse is going to go to is at least the top of the previous range. So that will be at least, that will be maybe my first take profit. Okay. So except if something sudden should happen, maybe some news or the trend suddenly reversed or something tragic that may now cause the trend to reverse. All right. But we know for sure that as long as that trend continues, the minimum place that we are going to get to is the next high. All right. So sometimes we may have other ideas that will make us, let me say we have something like an imbalance up here. We may still say that at least if the market is doing normal, all right, at least the minimum place we get to is maybe half of that imbalance. So there are different things you can look at to know how far the trend will go and where is a good place for you to take profits. You can also take profits maybe before the high. There are many places, but you cannot tell for sure the exact place that it will turn. All right, but what we can tell is the most likely places that something may happen, the most likely place it will reach, the most likely place it would start correcting from. Like I can tell you, if I have an uptrend now, okay, and the price makes an impulse. Let me say we have a trending environment. All right, I can tell you to a good extent or to maybe like a 50% probability where the price will stop and start correcting. All right. These are things that we will learn. But yes, we can calculate it. But what I'm trying to tell you is that you are never 100% sure in trading. That's just the main point of it. Nothing is 100% sure. But you know where it should go to, but nothing is 100% sure because anything can happen at any time. The only thing you can control is how much you lose on a trade, and the amount of analysis that you do before entering your trade, the amount of care that you put in. Okay, so you can tell where you should go to, all right, but you cannot say for 100% certain that it will reach there because I hear some traders that they will say that the market must get here. You never hear me say that. You never hear any experienced trader say that. You never hear them say that, oh, the market must get here, it must get there. Everything is probability. It might get there. All right. All right. So we may say that it has a 90% probability of getting there, but there's still that 10% probability that something sudden or something terrible may happen before it gets there. So that's just what I wanted to know. So there are ways to tell, but never 100% sure. Understood?
Yeah, yeah, thank you.
Okay. Yeah. Any other question?
Okay, yeah, I have a question.
Yeah.
You mentioned earlier that when we determine our what's it called, our order block,
Yes.
you said that some traders who are excessive cautious,
Mm.
when after they determine the mean range, was that what you called it?
Mean threshold. Yes.
Mean threshold rather, that they use the lower half of it.
Yeah.
But then again, you said price is not supposed to get into, it's not supposed to go past that mean threshold before flying back up. So, and you said those traders will wait when it crosses that main threshold into that lower half, and then that's when they will take their trade. So, if we're
As
expecting the price not to get into that place,
mm.
then so how is it that they wait for it to get there before taking the trade?
Okay. What I said is that we don't expect it to get there, but even if it gets there, sometimes it usually gets there. But once it gets there, it doesn't spend much time there. Okay, so what those traders are trying to achieve is that they are trying to get the lowest possible drawdown. So what is a drawdown? Drawdown is the amount of pips the market will go against you before going in your favor. All right. So those traders are like, the idea is that if this is the other block area, all right, and they know that if we should come into the mean threshold, okay, I can't tell you exactly how many times it may get to the mean threshold, but it usually gets there sometimes. But we don't expect it to spend much time at the mean threshold. If the other block is valid, it may not even get into the mean threshold before running away. But sometimes it will mitigate it very well and get to the mean threshold. But once it gets there, it doesn't spend time there, or it doesn't spend much time. Once it gets there, it starts moving away. All right. So what those traders are trying to do is that, let me say this is the mean threshold. All right. So let me say that the other block area from the top to the bottom. Let's say that the other block area is 10 pips. Okay. So let's say that the other block area is 10 pips. 10 pips. All right. So you that entered at the beginning of the other block, your stop loss is 10 pips. Okay. But the trader that entered at the mean threshold, his own stop loss is 5 pips. Is 5 pips. Okay. So his own risk reward ratio is going to be like double of your own. Okay. And if the price should get to his entry and run away, it may go only one pip below it. It may, let me say, the price, when the price came down to that other block, it went one pip below the mean threshold before flying away. All right, it went one pip below it. So his own drawdown was one pip, while your own drawdown was 6 pips. I don't know. Do you understand the concept of drawdown? So it went 6 pips against you before it started going up. But for him, it only went one pip against him before going up. All right. So what they are trying to do is to get small drawdown and also big rewards. All right. So since his stop loss is only 5 pips, if both of you have the same account size and you're using the same risk, okay, since his stop loss is half of your own, he can make his lot size double of your lot size. Okay, so they are trying to get more money, okay, by using less risk. But the bad part of well, the bad part about this is that we said that we don't usually expect it to go to the main threshold. So most times you may not get this entry below the main threshold. You may never get it. Okay, it may just touch the other block a little bit and start flying. All right, so it may not get to the main threshold. So if you enter at the beginning of the order block, you will have more trades. But if you enter at the main threshold, you will have less trades, but the few trades that you get will make you a lot more money than the people that enter at the top of it. So that's just the concept. So it's not that we will never get there. It's just that sometimes we get there, and if you can enter there successfully, you are going to have a smaller stop loss, okay, and you can double your lot size on that trade without risking more of your account. That's the whole concept behind it. So we usually get down to the main threshold, but not every time. Do you get?
Yes, yes, I do.
Okay. Another person. Okay. Let's.
Hey guys,
Okay. Okay. Yeah.
sorry to draw you back, but I didn't really get how to figure out the main threshold on a particular candle.
Okay. What you do is that you draw a rectangle, right? You draw a rectangle. So let me say that this is let me say this is the other block here. Okay, this big candle that is here. So you draw a rectangle on that candle. Okay. So if you're on trading view and you draw a rectangle like this, you have all these dots. You have one, two, three, four at the corners, and then you have this other four, one, two, three, four, that are at the middle of the square or the rectangle. So you choose this one here. Choose this ones by the side. Okay, it has disappeared. Uh, okay. You either choose the ones at the side. Let me try and find it. Okay, so it's around here, sha. Okay. Or you use a Fibonacci tool, all right? Remember when we said we use our Fibonacci to draw and get the equilibrium and premium and discounts, okay? So basically, um, if you are trying to sell, okay, you are trying to sell at the premium, while if you are trying to buy, you are trying to buy at a discount. So the main threshold in a bullish order block, so you are trying to buy on a bullish order block, the main threshold will be under the discount area. So once you draw your Fibonacci like this, the main threshold is the middle of it. So that's the main threshold. Okay, so that's the main threshold of the order block. So if it's a bearish order block, assuming this one for instance, the main threshold, this is not an order block, but we're saying for instance, all right, this one now will be our Fibonacci. So these are our Fibonacci tool as usual, and this will be the main threshold. The middle of it will be the main threshold. Do you understand? Do you get?
Yes, yes, yes.
Okay. Any other?
Yeah,
Yeah.
please, I want to ask something. The
Okay.
last the last example of order block that you just identified now,
Uh,
is it that it is not a valid order block or it's not order block at all?
it's not order block at all. Why is not an order block? Is that we have this very long week on top. So there is a good amount of price action in this week. You can see that this week is actually where price even respected. All right. So like the order block is usually the last thing that happens before the trend. Okay. So look at this. Look at this area. The order block has the lowest bottom. Okay. The other block has the lowest bottom, but here the other block doesn't have the highest top. All right, so the highest top belongs to this candle. That means that if you're looking for the true order block, you go down to a lower time frame and find a bullish candle that is inside here. Okay, so this candle is, there's a bullish candle inside it, but you have to go down to a lower time frame to find it. Do you grab? So this is not the real order block. The other block is somewhere inside here. Do you get?
Okay, thank you.
But we will not even regard it as an order block. Why? Because the trend is bullish. So I will not be looking to sell a bearish order block in a bullish trend. So bearish order blocks are for bearish trend, while bullish order blocks are for bullish trend. So in this bullish trends, I'm only looking to buy down here. So all these ones, I'm just looking at them as maybe a resistance. So when price hits them, it may correct. As you can see here, price hit it. So it's not really a selling opportunity for price to keep going down. It's just for a correction, and then price continues going higher. So I don't really regard bearish order block in a bullish market. Okay, you regard bullish order blocks in a bullish market. So, but in this case, the other block is somewhere inside here. Let me try and identify it first. Let me go down to a lower time frame just to prove a point. All right. So this is the weak area. Okay. So if I go down to, let me say, 5 minutes chart. Let me say 5 minutes charts. We still have it. You can now see that that is not the real order block. You can see the other block here, but we can still even go down to a lower time frame and try and see what's there. Right. So we can go down. We are still having the same results. I can still go down a bit further. Let me say 1 minute. Okay. So I can now see the 1 minute. Either I use this three, I refine this three, or I may just beat my chest and put it at this last guy, this one that happened here. I will now say that's my order block. So I just went down to the 1 minute to refine it. Okay. I just went down to the 1 minute to refine it, and you can see that that is where we have the main reaction from the grab. So most times you are looking if you have a bullish order block, we are trying to make sure that the other block was the has the I mean the lowest part of the trend happened in that other block. While if it's a bearish order block, we are trying to make sure that the highest part of the old trend happened in that other block. You get me? You get me now?
Yeah, sure. Thank you.
Okay. Yeah.
Sorry, I want to digress a
Yes.
bit, if you permit here. You mentioned that you cannot be looking for a bullish order block in a downtrend,
Yes.
but then I know that there are some traders who trade retracements.
Yes.
Like in an uptrend, for example, they'll be looking for opportunities when the market will retrace, and then they will trade that retracement
Yes.
back down,
Yeah.
which is a sell opportunity in a bullish trend.
Yeah.
So is that not valid? Is that not a valid situation to look for a bearish order block?
It is a valid situation, but in some cases, right? So let me give you the kind of scenario that I will do that. Personally, I trade retracements as well. But if we have a strong trend, right? I'm always buying. In this kind of uptrend, I'm always buying. I don't look for sales. If we have a downtrend, I'm always selling. Okay. But sometimes, let me say this trend now, okay. Let me say it's happening on a 1 hour time frame. Okay. Happening on a 1 hour time frame. All these pullbacks, I'm not trying to trade them. I'm only buying. But if I have a break of market structure here, and I know for a fact that we're having a deep correction of this wave, all right, and we are going to come down to maybe somewhere here or somewhere here, I'm going to trade this retracement because if I'm to try and wait for it to come down like this, okay, I may waste my whole week and I won't do any trading. Okay, I will waste the whole week and there will be no chances of making any money. All right, so I have to trade this correction because now, in this case, this correction is actually a it's kind of like an impulse or it's kind of like a new trend, even though it will not last very, very long, but it will last long enough to be called a new trend on its own. So that means that during this deep correction, the correct place to actually place your trade is to the downside. All right, even though the trend is generally up, but the correct place to place your trade now will be as a retracement trader. So you won't just come like this and try and be trading all this move down. Okay, if you find a break in market structure, okay, that is now a sign that okay, a new trend has started for some time. Okay, and this trend will last. So in this case now, I would sell a bearish order block here very confidently. Very confidently. If there's a bearish order block here, I will sell it because we already have a break of market structure here. So I will sell that. I will look for that bearish order block and I will sell it there and look for price to come down and complete the retracement. Then once we complete the retracement, maybe hit a bullish order block down here. I don't know, something it may not be a bullish order block, it may be something else. But once we reach there, okay, I will look for buys. All right, I won't just buy immediately. I will look for some sign of strength. Okay, before I now join the trend and continue buying. So it's only if that retracement is going to last for some time that I'm going to trade a retracement. So if you are a day trader now, if you're a day trader, you can trade a retracement if you know that that retracement is going to last that entire day. Okay. For me now, how will I put it? I'm a short-term trader, so I can trade. I can hold a trade from Monday to Friday. I can also day trade sometimes. I actually trade a lot of ways, but most times, what I'm looking for is a trade on 1 hour time frame. Okay, so I can hold the trade for 1 week or 2 weeks. All right. So if the retracement is going to last for the entire week, I will trade the retracement. No problem because I don't trade many pairs. I don't trade many pairs. I trade only CHF JPY, GBP USD, and Euro AUD. So if there's no opportunity on the side of the trend, I will trade against the trend as long as I am sure that that correction is going to last for some time. You understand? So that's why you would. That's the only reasonable instance that I would trade a bearish order block in a bullish market. I think that's clear, right?
Yes, so it is. It's
Uh-huh.
clear.
Yeah. Well, I thought we would talk about imbalances today, but what I will do is that I will send you guys a short video, all right? That will just give you the basics of imbalances that you guys will watch. I will try and make it be under 5 or 10 minutes so that tomorrow we will not discuss too much. This other block has taken the entire 1 hour I'm now dedicating to our classes. I don't want to be wasting much time anymore so that I can sleep on time. So it's 9 o'clock already. Um, what should I do today as an assignment? As an assignment, just record a video on your phone, okay? And then identify 3 other blocks in that video, and then tell me why you think it is an other block and why you and look at these rules now. Okay, you can write these rules down in your book. I send this PDF to the class, so you may cite 1 or 2 of these rules, okay, and see that this thing happened in this other block, so I'm counting it as a valid one. So just record that thing on your phone screen, whether in TradingView or in MetaTrader, and you will send it to me. 3 examples in one video. So like I'm explaining to you guys now, I'm teaching you guys. So you just teach me in that video that okay, this is my bullish order block. Why is it my bullish order block? It's my bullish order block because it is the last down candle here, and I'm ignoring the wick for this reason. Okay, this order block is not valid because it is not the highest point of the wave. All right, so something like that. Just a very simple video teaching me a little thing about order block, or just explaining an order block to your friend who is a amateur, all right, who doesn't know anything about trading like that. So that's the assignment. Nothing in the PDF. Just do a simple video and submit it to me. Do you understand?
Yeah.
Okay. All right. Please, I would like to round up now. Does anybody have a question before we close? No questions. All right. So that would be the end of our meeting. Thank you guys again for that amazing session. This will be good night from me to you guys. I hope you guys have a good night's rest. Bye bye. Good night.
Thank you.
Yeah.